greenback. Well, let's get some more on all of that. Michael Mattiusi, Forex strategist at Western Union Business Solutions, joins us now in our Sydney CBD studio. Michael, great to see you there. Firstly on the Kiwi dollar moves, what do you make of the reaction and what do we take out of it, the statement, the signals coming from the RBNZ?
Yeah, look, it's largely a positive statement. As you mentioned, we saw the Kiwi strengthen against the Aussie and the US on the back of it. But it's largely the same story there from the RBNZ. So rate rises remain on the cards, but with the high NZ dollar, they're prepared to see what the inflationary pressures will be like, and as a result, they're happy to delay any rate rises. So it's not surprising to see that Kiwi come back off and drift lower as the market digests that, and unfortunately, we may still be in that pattern we've seen in New Zealand over the past 3 years, really, whereby the Kiwi strengthens on the back of potential rate rises and then drops back off once those rate rises are delayed further.
Okay, got to ask you too about the Fed, what you made of that statement there, because we were hearing that it was perhaps less dovish, a little more hawkish. What do you think?
Yeah, that's right. Look, I mean, it's not groundbreaking news. They largely repeated what they've said over the last few months. So they need to see continued evidence of sustained growth in the US economy. Now, with the government being partially shut down over the first few weeks of October, the chances of them going ahead and tapering this month were slim to none. So the statement largely fell into market expectations, and as a result, even though trading was choppy, we've seen the Aussie come back to roughly where we left it yesterday afternoon. So unfortunately for the Aussie dollar, those short-term prospects out of the delay of tapering storyline have been minimised now. Look, in hindsight, the Fed's decision to refrain from tapering in the month of September is looking like a masterstroke. I mean, it gave the US economy a buffer that the US government shutdown ate into. So with potentially the same scenario in January, February, or I suppose likely a similar scenario in January, February, it seems unreasonable for the Fed to go ahead and taper prior to Feb, March, certainly when it's led by Bernanke and soon Yellen, who are very, very conservative and do not want to step into this early.
It's interesting though, isn't it though, because you get someone like that Wall Street Journal reporter, John Hilsenrather, you know, Fed whisperer, he's known as, and really seemed to move markets. His report that sources were telling him a December taper was on the cards. It seemed to be a bit of a shift in market, perhaps that, you know, instead of March, maybe it's more likely January for a taper. I mean, what do you think of all of that then? You don't think there's much to be made of that? It's still going to be March or April?
Yeah, look, I mean, had you asked me or most people a week before the Fed September announcement, I'd say 99% of participants would have betted on a taper, and that wasn't the case. So anything can happen, and it often does. So I'm not saying that there's definitely not going to be a taper before Feb, March, but I see it being reasonable given the recovery efforts in the US are now on the back foot after 16 days of a government shutdown, and the fact that the Fed has been consistent in their messaging. They need to see improvement, particularly in jobs data, inflation and housing before they're willing to implement any sort of tapering.
For the Aussie, obviously we've got the China data coming out this week. What's your sense on that? Is that the next big key event for the Aussie? What could that do to the Aussie's outlook?
Yeah, look, prior to yesterday, China was the focus, and it will come back into focus today and certainly tomorrow with that data. And there's just widespread market pessimism at the moment. We've had additional reports out that the top 4 Chinese banks officially wrote off the most bad debt since 2010. And we've now got the interest owed by borrowers in China accounts for 12.5% of GDP. That's quite a remarkable figure, and it goes a long way in bolstering that pessimism in the market around China's current economic health in the broader economy. And so every piece of data will be dissected. You can bet your bottom dollar on that, kicking off tomorrow. And then obviously we've got the RBA's rate decision on Tuesday they've been quite well known to make a move on Melbourne Cup Day. So while a hold is expected, an additional cut is still on the cards, and Governor Glenn Stevens was quite clear about that on Tuesday.
Oh, look, great to get your analysis as always, Michael. Thank you so much for that.
Thank you.
Michael Mattiusi there from Western Union Business Solutions. We're going to take